Hey guys, welcome back to the channel. This is Stock Brock. Today I'm going to be going into a company that has the potential to hit $1 trillion within the decade or within a decade. Who knows? This company is Uber. Ride haul disruptor to global platform giant. One of the decade's biggest business stories. But could Uber vault into that $1 trillion club? Let's break it down. Concrete path to that milestone, the bold opportunities ahead, and some of the risks that are come along with this investment. Uber isn't just rides anymore. Nearly half of its revenue comes from delivery and new bets on freight, advertising, and autonomy, which are rapidly scaling as I speak. With its global footprint, network effects, 3.3 billion rides annually, Uber can tap enormous markets like the $712 billion ride hauling market by 2033, over $2 trillion for the food delivery market by 2030, and multi-trillion-dollar market for freight. Crucially, Uber is now profitable, generating record free cash flow with 2025 revenue at $44 billion, adjusted EBITDA of $6.5 billion, in its first ever consecutive years of GAAP profits. For a $1 trillion market cap, Uber must 7x profits from its current levels over the next decade, reaching about 40 to 50 billion in annual net income. Ambitious, but achievable. Especially if it activates high margin avenues, kind of like an advertising avenue or the freight avenue. Some of the opportunities with Uber is the autonomous tech and partnerships. Uber partners with global leaders like Waymo and BYD, enabling a platform-first rollout of self-driving and electric vehicles. This shrinks the driver costs, increasing uptime, and broadens global reach, with autonomous services now in the US, Europe, and the Middle East. They also have their ad platform. Uber's ad revenue is soaring, up 60% year over year, with in-trip ads seeing 10% higher engagement than standard digital ads. Its global user base gives brands unique access to moments of movement, and Uber's data enables hyper targeting. They also have their ecosystem expansion, from government travel to contracts to launching non-food delivery with retail partners and adding 100,000 electric vehicles. Uber's diversified platform boosts engagement and share of wallet. They also have their membership and cross-utilization. Uber One's platform has 36 plus million members, generating 3x the profits of average customers and reinforcing a sticky subscription ecosystem. And the valuation upside, Uber trades at a PE of 15.5x, below its peers, backed by 12.6% revenue CAGR projected through 2029, robust free cash flow, and a $20 billion stock buyback. They have strong management as well. Their CEO is a boss, as you would say. So kind of do your research on that, learn about their CEO. Some of the risks, regulations, major risks around worker classification and tax liabilities could impact operating margins. That's not too much of a high risk, but always got to consider all the risk. Competitive pressure, intensifying competition in ride haul, delivery, ads, plus future robotaxis puts continued profit growth to the test. Execution and market cycles. Uber must maintain discipline and rapid execution as new verticals scale, or have the risk of falling short of financial targets. The CEO vision and bottom line. Uber CEO says, we're building the infrastructure of the transportation economy with disciplined growth, strategic partnerships, and expanding moats in autonomy and advertising. Uber is chasing not just a valuation milestone, but the foundation for decades of value creation. Will Uber reach the $1 trillion club? If management executes, it could be one of the most valuable companies. But as always, major risks lurk. This is not financial advice. Subscribe for more in-depth deep dives on simple stocks like Uber. Thanks for watching. This is Stock Brock, and hey, maybe I will buy Uber. Peace.